on filing of GST returns, organized by Department of Accounting and Finance, S.S.T College of Ulhasnagar. Dear our founder principal, respected Dr. J.C. Purushwani sir, स्टूडेंट को अपडेट नॉलेज देने के लिए ऑलवेज आगे रहता है और इसी मोड पे आज फाइलिंग ऑफ जीएसटी रिटर्न्स अपडेटेड नॉलेज रिलेटेड एक नेशनल लेवल वेबिनार एसएसटी कॉलेज डिपार्टमेंट ऑफ अकाउंटिंग एंड फाइनेंस ऑर्गेनाइज कर रहा है। इस प्रोग्राम को ऑर्गेनाइज करने के लिए हमारे महाविद्यालय के आईक्यूएससी कोऑर्डिनेटर डॉक्टर खुशबू पुरुषवानी मैम, इनका भी बहुत बड़ा सहयोग है। फाइलिंग ऑफ जीएसटी एंड रिटर्न्स, इससे रिलेटेड हमें इंफॉर्मेशन देने के लिए हमारे साथ मौजूद है रिस्पेक्टेड मिसेस किंजल मिरानी मैम, is the chartered accountant and master of commerce. She has experience of more than 10 years in the field of accounting, taxation and audit. She has been working as a practicing chartered accountant and as a set of her own practice at Ghatkopar. She advises the corporate houses, individual startups, etc. Important things, she stood a first in MPVP College of Commerce, Borivali in TY BCom 2019. She also first ranked in Account 1, Account 2 and Account 3 in her college and awarded as a Best Student Awards in 2009. The special achievement, ma'am scored 100 out of 100 marks in Account 1 TY BCom and she has cleared her CA in a first attempt. So an excellent personality with us. Ma'am, over to you.
Thank you. First, I would like to thank S.S.T College of Arts and Commerce for giving me an opportunity to speak on GST. My sincere thanks to the principal ma'am, all the coordinators and management of S.S.T College. My special thanks to Mithili ma'am for arranging such a wonderful seminar and asking me to present this or to speak on this. Thank you so much, Mithili ma'am, and all the coordinators of S.S.T College. We'll start with the session. So we'll not cover only GST filing. Before that, we will understand the basics of GST, why GST is required, who has to take the registration, and then we'll go for the GST return. So what is GST? So the full form of GST is Goods and Service Tax. Why the GST was implemented? What was the reason for implementing the GST? So before GST was there, before the GST, there was many tax like VAT, service tax, excise. Suppose I'm dealing in a goods, so I have to take the VAT registration, I have to file the VAT return. Suppose I'm into the service industry, I'm providing the services, then I have to take the service tax registration, excise duty. So many tax was there. So GST has come to have a one nation, one tax concept. So it has removed the service tax, VAT and excise duty and has come up with one tax, which is GST, Goods and Service Tax. So it is indirect tax, which has replaced many indirect tax like excise duty, VAT and service tax. GST Act was passed in the Parliament on 29th March 2017 and came into effect from 1st July 2017. So till 30th June 2017, the assessee was filing VAT return, service tax return, but from 1st July 2017, the GST has come into the picture and whoever has the VAT registration or service tax registration were migrated into the GST registration. So we'll understand what is GST, why the GST registration is required. We'll understand first common terms in GST. So the first one is registration. Who is liable to take GST registration and why the GST registration is required? So every supplier shall be liable to be registered under this act where he makes a taxable supply of goods or services or both if his aggregate turnover in a financial year exceeds the threshold limit. So if the person providing the taxable supply of goods or services and if his aggregate turnover exceeds the threshold limit, then he is liable for registration. Now here, what is the meaning of aggregate turnover? Because the registration depends on your aggregate turnover. So what is aggregate turnover? So aggregate turnover means all the turnover, like your taxable supply, your exempt supply, your zero rated supply, as well as your interstate sales. This all sales becomes your aggregate turnover. So when I'm liable to registration, so if my aggregate turnover exceeds the threshold limit. Now what is threshold limit? The threshold limit is 20 lakh for service industry and 40 lakh for goods. Suppose I'm dealing in a goods, I'm a trader. Then for me, the limit for registration is 40 lakh. And suppose I'm dealing in a service, I'm providing a service, then limit for me is 20 lakh. Now what is aggregate turnover? We'll understand the aggregate turnover with one example. Suppose I'm manufacturing a goods, I'm selling the goods which is exempt from GST. The turnover for my exempt goods is 1.5 crore. I also provide a taxable goods. I also sell the taxable goods, the turnover of which is 15 lakh rupees. So my total sales, that is exempt sales plus taxable sales, is 1.65 crore. Okay. So since even if my taxable turnover is 15 lakh, which is below the threshold limit of 20 lakh and 40 lakh, so, even then I'm liable for registration because my aggregate turnover exceeds the 20 lakh and 40 lakh. Same in case of a service. So even if you are exempt for registration, you have to include all the services. So in aggregate turnover, we have to include our exempt service also, and not only the taxable supply. Without registration, suppose if I have not taken the registration, my limit is below 20 lakh. So can I take the registration? Yes, even if your turnover is below the threshold limit, it is voluntarily you can take the registration, even if it is not compulsory. But suppose I'm purchasing the goods on which I'm already paying the GST. Okay, so it will increase my cost. So I want to take the benefit of that GST. So for that, I can take the voluntary registration without, even if my threshold limit does not increase. For example, I'm purchasing goods for rupees 1 lakh. Or I have paid 18% GST on that, so my cost is 1,18,000. Okay, so if I am not a registered dealer, my cost will be 1,18,000 because I will not get the benefit of tax what I have paid while doing my purchase. So, and when I'm selling that goods, I'll add profit margin on that 1,18,000. Say for example, my profit margin is 10,000. So for me, the selling price will be 1,28,000. So this 18,000 unnecessary burden will go to the ultimate consumer. So to avoid that, I can take the GST registration and take the benefit of that 18,000. So same example, suppose I'm a registered, I've taken voluntary registration. So if I've taken the voluntary registration, so government will give me 18,000 as an input tax credit on my sales. So with the same example, suppose I'm a registered dealer, I've purchased goods for 1 lakh on which I've paid the 18,000 GST. Okay, so for me now the cost is 1 lakh and not 1,18,000 because that 18,000 I can claim against my output tax liability. So in now case my cost will be 1 lakh rupees. I'll add a profit of 10,000 rupees. I'll charge GST on 1 lakh 10,000 rupees and not on 1,28,000. And whatever tax I'm charging on my sales, 1,10,000. Say for example, it is 20,000 of my tax on sales, that is output tax. So I can claim out of that 20,000, that 18,000 which is I have already paid on my purchase, I'll get the input tax credit on that. So I have to pay only 2,000 to the government. So which will avoid cascading effect of tax also. It will not come tax on tax. So this is without. Next is time of supply. Now what is time of supply and why time of supply is important? Time of supply means the point in time when the goods or services are considered as supplied. Now, when the tax liability will arise on the supplier. So that will depend on your time of supply. Time of supply will determine the liability to pay the tax. Say for example, I got a service contract. I got a service contract to providing the service in the month of February, but I got the contract in the month of January. That you have to provide me a service of rupees 50 lakh. That person has paid me advance of rupees 10 lakh in the month of January and balance 40 lakh he paid in the month of February. So what time of supply says? Time of supply says you have to pay the GST on the basis of either issuance of tax invoice or advance payment, whichever is earlier. Issuance of tax invoice or payment of receipt of advance, whichever is earlier. So in our example, I have received 10 lakh rupees in the month of January. So that 10 lakh rupees, I will assume that it is received inclusive of tax, and by doing the reverse calculation, I'll pay the tax on rupees 10 lakh in the month of January itself. And on balance of 40 lakh rupees, I will pay the tax in the month of February. So my total liability will be on 50 lakh, but it is to be divided on the basis of invoice or payment, whichever is earlier. That's why time of supply is important. So time of supply will determine when the person has to pay the tax, which is on the basis of tax invoice or advance payment, whichever is earlier. The next one is place of supply. Now, what is place of supply? So GST is a destination based tax. Okay. Suppose I'm in Maharashtra, I'm supplying goods to the Gujarat. Okay. So my place of supply will be Gujarat and not Maharashtra. Even my goods manufacture, trading, everything is done in Maharashtra. But since I'm supplying that goods in Gujarat, my place of supply will be Gujarat and not Maharashtra. Next one is cancellation of GST registration. What is cancellation of GST registration? It means that the taxpayer will not be a GST registered person anymore. He will not have to pay or collect GST and claim input tax credit, and accordingly need not file the GST registration. Now we'll understand what is cancellation. Suppose I've taken the GST registration, my turnover was 50 lakh, I've taken the GST registration. After 3 years of registration, I've stopped my business. So I'm no more liable to pay GST, no more I'm liable to file the GST return. In that case, I will voluntarily cancel my GST registration, for which I will file the application with GST officer. They will evaluate our case. They will check whether all the returns are filed or not till the date of cancellation, whether we have paid all the taxes or not till the date of cancellation, everything they will check. If they seems that application is genuine, they will cancel my GST registration. The other cases, suppose I've taken the GST registration, but I'm not filing the GST return. I'm just collecting the tax, but I'm not paying it to the government, nor I'm filing the GST return. In that case, the GST officer will give me a notice that you have not filed return for last 3 months or last 1 quarter. So either you file the return, else I'm going to cancel your GST registration. So they'll give some time in the notice for filing the pending returns which are pending and for tax payment. So if we don't reply to that notice, we don't file our return on time, the time on which given in the notice, then the officer can cancel our GST registration. Next is components of GST. So there are 3 components of GST: CGST, SGST, and IGST. So what is CGST? CGST is Central Goods and Service Tax, SGST is State Goods and Service Tax, and IGST is Integrated Goods and Service Tax. Now, what is why there is a 3 type of tax: CGST, SGST, and IGST? Why there are 3 components of GST? So, to get the revenue by state as well as center, the government has introduced the concept of CGST, SGST, and IGST. So, whatever sale I'm doing, interstate sale. Suppose I'm doing interstate sale, that is one state to another state. Same example what we have discussed earlier. Suppose I'm in Maharashtra, I'm supplying goods in the state of Gujarat. Then in that case, it will be considered as interstate sales, which is one state to another state sales. So in that case, I have to charge IGST. Suppose my tax rate is 18%. So on the invoice raised by me, I will charge IGST full 18%. Suppose my rate is 12%, then I'll charge full 12%. Suppose invoice is of 10 lakh, then I'll charge 18%, that is 1,80,000 full IGST, which is integrated service tax, and that tax will go to the central government. Now, suppose I'm doing intrastate sales. Intrastate sales means the sales within the state. I'm in Borivali, for example, and I'm supplying goods to Thane. So both are in Maharashtra. So I'm doing intrastate sales, that is within the state sales. So in that case, we have to charge CGST and SGST. Why there is a CGST and SGST? Because 50% of the tax will go to the center and 50% of tax will go to the state. That's why the government has kept 2 components in intrastate sales, that is CGST and SGST. So if I'm issuing the invoice of 10 lakh rupees and my GST rate is 18% and I'm doing within the state sale, in that case, I will charge 9% as CGST and 9% as SGST. So whatever tax bracket you are, whatever tax rate is applicable to your product, you will charge 50% to CGST and 50% to SGST. So this is the CGST, SGST and IGST. CGST and SGST applicable on intra-state sales, that is within the state sales, and IGST is applicable to interstate sales, that is one state to another state sales. Now, what are the various rates under the GST? So the rate under the GST is first one is exempted tax, that is no tax or nil rated, which is 0%. The second one is 5% slab, 12% slab, 18% and 28%. So majority of the product under GST is covered under the 12% and 18%. Maximum product, you can see the 7% of item are under the nil rated or exempted. 14% of the items are covered under the 5% tax bracket. 17% of the item are covered under the 12% tax bracket. 43% of the item is covered under the 83% tax bracket, and the balance is on 28%. Now we'll understand what is exempted tax, what is nil rated. There is one more concept, zero rated sales. So what is the difference between all these tax? So we can first read this. In India, almost 500 plus services and over 1300 product falls under the four major GST slab. This is 5%, 12, 18 and 28%. The GST Council periodically revises the item under each slab rate to adjust them according to the industry demand. First, we'll come to the exempted tax. One second. Now, what is exempted tax or what is nil rated tax? So, nil rated tax or exempted tax are the essential product, which the government thinks that on that product we should not charge GST. So, that are covered under the exempted tax or nil rated. Now, what is the difference between the exempted tax and nil rated tax? So, nil rated tax means it has specifically 0% tax rate. In that product schedule, the rate schedule which the government has given, on that product has 0% rate. That is called as nil rated. What is exempted? So, exempted means it has a rate like 5%, 12%. But since government feels this product should be exempted, by special notification, the government has exempted that product. So, it is called as exempted tax. It means it has a rate, but it is covered under the exempted tax, like fresh fruits, vegetables, which are essential items, are covered under the exempted tax because it is essential. One more tax is the zero rated. What is zero rated? So, zero rated means export of goods and sales to SEZ. Suppose I am doing export of goods. So, to promote the export of goods, the government has given the export as zero rated tax. So, I don't have to pay any tax if I do the export of goods. Same in case of a sale to SEZ. Suppose I am supplying the goods to the special economic zone, then I can sell that product without GST because it is known as zero rated sales. Now, in that also we have two options. In zero rated sales and export sales, we have two options. Either we can charge the GST, we can pay the GST to the government and claim the refund from the government for export of goods or sale to SEZ. Second option, the government has come out with the LUT, letter of undertaking. You have to give file one declaration on the GST portal saying that I'm going to export the goods. So against LUT, I won't charge any tax on my export and on my sale to SEZ. Why this two system? See, suppose I'm doing export of goods, but when I'm purchasing, I'm paying the tax. So it will accumulate my ITC so much. So to avoid that, either you can go for ITC refund, you charge zero tax on your export or SEZ sales, and you whatever accumulated ITC you have on your purchase, you claim refund of that ITC. Second option is that you charge tax on your export and sale to SEZ. You utilize that ITC which you have paid on your purchases, which purchase was made to export this good or sale to SEZ. So net payable tax I paid to the government, and whatever I have paid on export of goods, whatever I have on my tax invoice of export of goods, I have to provide the necessary documents to the government that I have done this export, and we can claim the refund from government. So that is the zero rated sales. The basic tax rate is 5%, 12% and 18%. Maximum product are covered in 18%. And what is 28%? So the luxury product, which are non-essential product, are covered under the 28%, like pan masala, tobacco, luxury cars, they all are covered in the 28%. So government feels that these are not essential product and they are luxury. So that's why the rate are higher in 28%. Next, we will see reverse charge mechanism, composite supply and mixed supply. The first we'll understand what is reverse charge mechanism. So in certain cases, normally the supplier of the goods or supplier of the service is liable to pay the tax. But under reverse charge, the government has given the responsibility to the recipient of the goods or services. So the recipient is liable to pay the tax and not the supplier. Okay, normally I'm selling goods, I'm providing services, I will charge GST on my invoice and I'll collect it from the person to whom I have provided the service. But under reverse charge mechanism, the service recipient is liable to pay the tax and not the service provider. Now, why this RCM has come? So suppose the RCM is applicable on import of goods. Okay, suppose I'm importing the goods, then the person from whom I'm importing the goods is not liable for registration in GST because he's not in the registration scope because he's outside India. Okay, so he's not in the GST registration. So how the government will come to know that how much import I have done? So to keep the track on that, the government has come with the concept of reverse charge mechanism. So if I'm doing the import of goods, I have to pay IGST on my import purchase. The second example is payment to advocate. Suppose individual advocates are there. So individual advocate says, they says my limit is below 20 lakh, I'm not liable to registration. But corporates are taking service of that individual advocate or form of advocate. So to track the income of that individual advocate and to understand how much advocate service the person has taken, the advocate services taken from the individual advocate are also covered under the reverse charge mechanism. And the third one is GTA services, goods transport agency services. So if I'm taking the service of GTA, goods transport agency, for transporting my goods from one place to another place, the company, the person who is taking the service are liable to pay the tax under reverse charge mechanism and not the GTA. The next one is composite supply. Now, what is composite supply? So composite supply means a supply made by a taxable person to a recipient consisting of two or more taxable supply of goods or service or both, or any combination thereof, which are naturally bundle and supply in conjunction with each other in the ordinary course of business, one of which will be the principal supply. Let's understand this with example. Composite supply means I have one product, which is my principal product, which is my main product. I am giving one more service which is ancillary to my principal product, without which I cannot sell my principal product. So it is known as composite supply. For example, I have purchased AC. Along with the AC, they have given me the service of installation of AC. So the principal product for AC seller is air condition. But along with that, they are also giving me service of installation of AC. So installation of service is not my principal supply, not the principal supply of the air condition seller, but the principal supply is air condition. So they don't charge me separately for AC and separately for that installation of service. They'll give me only one invoice, which is AC bill. So in that case, how to charge the GST? What will be the GST? How much they will charge GST on AC? How much they will charge GST on my installation service, which they have provided to me? So in this case, what rule says? In case of a composite supply, the rate of principal product will apply. So what is my principal product in this case? My principal product is air conditioner. So in this case, the rate of AC will apply and not the rate of installation services. So whatever is my principal product, I have to pay GST on my principal product together. Total bill I have to raise at the rate which is applicable to my principal product. So this is known as composite supply. One more example is, suppose I'm buying the homemade chocolate, which comes under one box. Okay, so they can't sell loosely. It has to be in the box. Okay, so my principal product is my chocolates. But the box which I am giving, it is ancillary to my principal product. To sell the principal product, I have to give that ancillary product. Okay, so in this case, the rate of chocolate, whatever tax rate is applicable to my chocolate will apply to this product. So it is known as composite supply. Next one is mixed supply. Mixed supply. Now, what is mixed supply? There is a similarity between the composite supply and mixed supply, but slight difference. Now, what is mixed supply? So, mixed supply means two or more products combined together and sold. For example, on the Diwali occasion, we get one product which is combination of dry fruits, chocolates, sweets. So they can be sold individually only. Matlab, this product are not, one product is principal, one product is ancillary to that. It is not like that. So if one product is dependent on the other product, this is composite supply. But if it is not dependent to other product, then it will come under the mixed supply. So the example which I'm giving, suppose I'm buying the Diwali gift hamper for my staff. Okay, it is consisting of dry fruits, it is consisting of chocolates, and it is consisting of sweet box. So there are various products which comes under the different tax rate. So this is called an example of mixed supply. Now, what will be the tax rate in case of a mixed supply? So what law says, in case of a mixed supply, the product which has the highest rate will be considered as your GST rate. So suppose one product is 12%, one product is 18%, and one product is 5% in my gift hamper. Then the entire my product, that gift hamper will be taxed at 18% tax rate, which is the highest tax rate amongst all the products. So how we will consider composite and mixed? As I said, composite means the product, the second product is dependent on my main product. It is compulsory to give. Then it is a composite. In case of a mixed supply, the person can sell individually also. Dry fruit, he can sell individually. He can sell chocolates individually. He can sell sweet box also individually, but they are selling mix also. So this is known as mixed supply. So in case of a mixed supply, the highest tax rate will be applicable. Now, input tax credit. What is input tax credit? So ITC is a mechanism to avoid cascading effect of taxes, that is tax on tax. Under the present system of taxation, credit of taxes being levied by the central government is not available as set off for payment of taxes levied by the state government and vice versa. A registered person can utilize GST Act who is paying tax due to the course of furtherance of business. Okay, so we'll study what is input tax credit. So as we have in the first sheet, I've explained you one case of input tax credit. I have purchased goods for rupees 1 lakh on which I have paid 18,000. I've sold that goods on which I've charged 20,000 of tax. So my output tax was 20,000 and I'll get the credit of that 18,000. So I have to pay only 2,000 to the government. So I'll get the credit of tax what I have paid 18,000. Now there's a concept of under what formula you can set off the credit. Okay, there's a CGST, there's a SGST, and there's a IGST. So suppose I have a credit in IGST and I have a liability to pay in CGST and SGST. Then can I set off my IGST credit against the liability of CGST and SGST? So yes, you can utilize your IGST credit and set off that against CGST and SGST. But for example, I have a liability in CGST and I have a credit in SGST. I have credit balance in my SGST ledger and I have a liability in my CGST ledger. So can I utilize that SGST credit to pay off my CGST liability? So no. So what rule says that credit levied by central government is not available to set off against the levied by the state government. So CGST and SGST cannot set off against each other. So you have to pay the liability of CGST and SGST will be carried forward. So whenever you have IGST liability, you can set off against that, but CGST and SGST internally cannot be set off. One more in input tax credit is you cannot, suppose I'm purchasing goods, partly I've used for my personal purpose and partly I've used for my business purpose. So you cannot take entire credit. So the credit, it should be apportioned. So there is one more concept of apportionment of credit and block credit. So what is apportionment of credit? Suppose I have purchased the goods which partly I'm using for my personal purpose, partly I'm using for my official purpose. Then I have to apportion the credit in the ratio of the use for business. So whatever credit I've used for my business purpose, that much only I can avail that input tax credit. For personal purpose, we cannot use the credit which goods I have purchased for my personal purpose or service which I have taken for my personal purposes. There is one more concept in input tax credit is block credit. Now, what is block credit? Block credit is government has specifically blocked that credit. Means even if you are purchasing that goods or you are availing that services, you cannot claim that input tax credit. Why so? So the government thinks the credit, the purchase or service which you are availing, if it is not for furtherance of your business, then you cannot avail the credit of that product. For example, health services. I'm going to a parlor and I'm availing my health services, or I'm availing beauty services. Okay, I've paid a bill of 1 lakh rupees on which they have charged 18% of IGST, and the bill is 1 lakh 18,000. Now I'm giving my GST number to them and I'm saying that I want to claim that credit of 18,000 which I have purchased on my beauty services. So what government says that the health service or beauty services what you are taking is personal in nature. So they have come up with one block credit list. So it is under the block credit list, and since we can't claim the credit of that 18,000 rupees, that will be considered as my expense. So this is a personal, so we cannot claim that. One more is I'm purchasing a car. On car, I'm paying the huge GST. The car amount is big, so I'm paying the huge GST on my purchase of car. So what happens? Can I claim the credit of car? So government says no. If only you are in the business of buying and selling of car, then that will be, you can say that it is for furtherance of business I have purchased the car, because my business is buying and selling of car. Then you can utilize the credit on purchase of car. But for example, I'm a normal businessman, I'm normal service provider, and I have purchased a car and I want to claim the input tax credit. So I cannot claim that credit because that is covered under the block credit, and that car I have not purchased for furtherance of my business. For example, my service is chartered accountant service. So car purchase is not for my furtherance of my business. So that credit I cannot claim. Same way, life insurance services, food and beverage services, health services, this all are covered under the block credit of which we cannot claim. The next one is GST refund. Now, what is GST refund? Usually when the GST paid is more than the GST liability, a situation of claiming GST refund arises. Under GST, the process of claiming a refund is standardized to avoid confusion. The process is online and time limit have also been set for the same. So one example we have already discussed for GST refund is I'm doing export of goods and sale to SEZ. In that case, we can claim a refund because government want to promote the export. So the export and SEZ, sale to SEZ are covered under the zero rated sales, and hence we can claim the GST refund. Either, as discussed, either we can claim the refund of accumulated ITC, I'll do my sales on zero rate, or you charge the tax on your export and claim the refund on tax paid on sales. So you can utilize that ITC against the sales. Now, what are the other cases in which I can claim the GST refund? For example, while paying the tax, by mistakenly, instead of 10,000, I've paid the amount of 1 lakh. So there will be an excess cash balance of 90,000 in my cash ledger. There's a ledger in cash ledger, credit ledger in GST portal. So suppose instead of 10,000, I've by mistakenly paid 1 lakh rupees. So 90,000 I have excess paid, and I know that in future 1 year, I'm not going to have a liability to pay because my excess credit is that much. I don't have to pay much tax in future also. So I don't want that 90,000 to lie with the government for a longer time. So in that case, if you have an excess balance in your cash ledger, you can claim a refund of GST. The next example is inadvertent rate structure. For example, whatever goods I am purchasing, it is of 18% or 12%. But the product which I am selling, it is of 5%. Whatever goods I'm purchasing, it has a rate of 12% or 18%, but my final product which I'm selling, it is of 5%. So my output tax liability is less than my input tax. I'm paying more tax on my purchase, but there's a less tax on my sales. So in that case, my ITC will get accumulated. So you can claim the refund of that accumulated ITC under the option inadvertent rate duty structure. My rate is higher for purchase and lower for sales. So in that case, your ITC will get accumulated, for which we can claim the refund. Now, how to make the application of refund? So refund can be done online. GST RFT 01 form is there. We have to apply the online application along with all the necessary documents. We have to give all the documents. Suppose you have done the export, then you have to give the sales bill to prove that you have done the export. You have to give the declaration that whatever refund you are claiming, it's a genuine. Even if in future the government come to know that you have claimed a fraud refund, then you are liable to refund that amount to the government, whatever refund you have taken, along with the interest and penalty. So that all declaration, all documents you have to give and submit it to the through GST portal to the GST officer through RFD 01 form. Now, what is the time limit? Can I claim the refund at any time? No. So there's a time limit prescribed. The time limit for claiming a refund is 2 years from the relevant date. Now, what is the relevant date? relevant date, till now the relevant date is 2 years from the date of invoice. Date, 2 years from the date of invoice. Yes. For example, I have supplied goods on 5th of April 2019. I have exported the goods on 5th of April 2019. So I can claim the refund of that export up to 5th of April 2021. Suppose I'm making the application of refund after 5th of April 2021, then the GST officer, the department will reject that application saying that it is a time bar. So we have to file the application within 2 years from the date of invoice. But in the current budget of 2022, there is a slight change in the relevant date concept. Now, instead of the date, they have come up with the return filing due date of the month in which the sales is done. Okay, so in our example, suppose my sales date was 5th April 2019. So the return filing, assuming my periodicity is monthly, the return filing due date for the month of April is 20th of May. So from 20th May 2019, I have to count the period of 2 years. So that is 20th May 2021 will be the last date for making application of refund. After that, we cannot file the refund application, and that will be the time bar. So these are the various things when we can claim the refund, that is export, SEZ sale, inadvertent rate duty structure, and excess in cash ledger. Now we'll come with the GST return. Now suppose I've sold goods of rupees 10 lakh, I've purchased goods of rupees 8 lakh. How the government will come to know? So we have to file one return, which will have all the data of sales and purchase, through which the government will come to know how much I've done the sales and how much purchase I've done. So GST return is a document containing detail of my all sales, purchase, which a taxpayer is required to file with the tax authorities. Then only they'll come to know. Otherwise, how will the government will come to know how much sales I've done, how I'll do the payment of tax. So all this will be done through my GST return. So all the registered business have to file mandatorily either quarterly or monthly returns, and an annual GST return is also have to file. So we have various returns under GST. The important return, which is normally all the taxpayer files, is GSTR 1, GSTR 3B, GSTR 9 and 9C. There are few other returns which is 2A, 2B, 5, 10, which is not that much important as 1 and 3B, but that is also part of GST return. So now we'll go one by one. What is the GST return advice? So the first one is GSTR 1. Now what is GSTR 1? So whatever sales I have made during the month or during the quarter, I have to report it to the government authority through GSTR 1 return. GSTR 1 return is reporting my all outward supply of goods and services made. Suppose I have done 10 lakh rupees of sales last month. So I have to report that 10 lakh rupees of sales in my return of that month in GSTR 1 return. So all the outward supplies, all the sales invoice, we have to report through GSTR 1. Not only sales. So how the GSTR 1 looks like? So GSTR 1 have different tabs. The first tab is B2B supply. What is B2B supply? Business to business. Suppose I have sold, Mr. X sold goods to Mr. Y. Mr. Y is a registered dealer under GST. I'm also, Mr. X is also a registered dealer. So when Mr. X sold to a registered dealer, Mr. Y, it is known as B2B supply. Both are registered. But the person to whom I'm supplying the goods is also registered. So since Mr. Y is registered, I have to add the sales bill of Mr. Y and the B2B tab, that is business to business tab. There is one more tab, that is B2C tab, business to consumer tab. What happens in B2C? I have sold goods to Mr. Z, who is an unregistered dealer. He don't have GST. I'm a registered dealer. I've sold goods of rupees 1 lakh. I've charged 18,000 of GST, but that person, the person to whom I am selling the goods, is an unregistered dealer. So in that case, I cannot enter that sales bill under B2B tab, because in B2B details, I have to add the GST number of the person to whom I've sold the goods. So that detail, the person to whom I'm selling the goods, if he is unregistered, we have to add the details of that bill in B2C tab, that is business to consumer tab. There is one more, export. If I'm doing the export of goods, that person won't have registration because I've sold goods outside India. So that won't come under the B2B tab, because in B2B tab, I have to enter the GST. So that I have to enter in the export of goods or services. There's one tab called as export tab. So we will enter all my export under the export tab. Now there is two things in export of goods or export of services. If we are doing export of goods, then I have to enter all the details of my shipping bill, and that details should match with your shipping bill, because shipping bill they can verify through IceGate portal. So if that details is not matching with your shipping bill, means shipping bill and GST data should match. If it is not matching, you won't be able to claim the refund, but you will find issue in claiming the refund. So you have to enter the shipping bill number, you have to enter the shipping bill date, you have to enter the tax invoice number and tax invoice date. All four things should match with your shipping bill. There are two more tabs: amendment in B2B, amendment in B2C, and amendment in export. For example, I have filed my return of last month, but I have missed one bill. I have 10 bill in my last month, but while filing the return, inadvertently I missed one bill to report. I have entered only 9 bills in my GSTR1. So one invoice is missed. So that party called me that madam आपका GST दिख नहीं रहा है क्रेडिट मेरे को पोर्टल में, because जब तक मैं GSTR1 फाइल नहीं करूंगी सामने वाले को उसका क्रेडिट नहीं दिखेगा. So that person told me that I am not able to see the credit. So you have tell me the proof, send me the proof that you have filed your GSTR1. So while going through the case, I found that by mistakenly, inadvertently, I have missed one invoice. So now, can I rectify? Can I file the revised return of that month? No. So in GST, there is no concept of revised return or rectification of return. So we have to amend that invoice, or we have to add that invoice in the next GSTR file. Suppose I'm filing while filing April 2021 return, I missed that invoice, then I'll add that invoice in the month of May 2021 GSTR1, which was missed in April return. Same way it happens that sometimes the amount is mistake. Instead of 1 lakh, I would put by mistakenly 10,000, or instead of 1 lakh, I would put by mistakenly 10 lakh. It's a typo error. So it happens while doing the GST return. So whatever corrections you have in the previous return, that can be done in your subsequent return. There is no option of filing the revised return. So we have to update that in the next return. So in GSTR1, there is an option called as amendment in your B2B invoice. Suppose that invoice was B2B. So I can enter that invoice in B2B, amendment of B2B tab. Same way, suppose you have made I've entered wrong shipping bill in my export bill. Okay, due to which I'm not able to claim my refund, because they are saying that the invoice shipping bill number in the GST portal and the shipping bill is different. So what I can do, while filing next return, I can amend that export bill, I can correct the shipping bill number, and then I'll be able to claim my refund also. So what is the time limit for this correction? Can I do this correction at any time? No. So the government has given some timeline up to which you can do the correction. So currently the timeline is 6 months from the end of financial year. So for 31st March 21, the due date for doing amendments correction is 30th September 2021. Till that I can do the correction. While filing the September return, I can do the correction. After that, I won't be able to. In the 6 months. So last filing return of September, I can do the correction. After which I won't be able to do any correction pertaining to my financial year 2021. So there is a time limit of 6 months. In the current budget, they've increased that timeline. So currently it is September month return is the last return where you can amend your rectification or errors made in the previous return. In the current budget 2022, they have extended this date to 30th November, not the filing of November. The date is 30th November specifically, up to which you can amend the invoice of which has to be rectified or which is to be corrected. So in the same example, suppose my financial year 2021, whatever corrections I have, I can do up to 30th November 2021, after which I won't be able to do any correction. If any correction is there, it has to be done by 30th November. There is one more option in GSTR1 is HSN code or S.S.T code summary. So there is one harmonized code and S.S.T service accounting code. Suppose I am selling the goods, then in my tax invoice, I have to write HSN code. So HSN code will be for identification of product, which product I am selling. That is for the HSN code is there. And S.S.T service accounting code, if I am providing a service, I have to write S.S.T code on my tax invoice to identify what type of service I am providing. So we have to give the summary of that HSN and S.S.T in the my GSTR1. So we have to give the summary also HSN wise or S.S.T wise, whatever applicable in that tab of HSN or S.S.T wise summary. There is one more tab in GSTR1 is documents issued. So you have to give the number of documents issued. Suppose last month I have 20 invoices, then I have to say, okay, my invoice number was 0012 to 020. Total 20 documents was there in my last month. So we have to give the number of invoice raised during last month or last quarter in your GSTR1. Now next one is the one more tab in GSTR1 is debit credit note. Suppose I have sold goods to Mr. Y of rupees 10 lakh, out of which he gave me back, he returned me goods of rupees 2 lakh. So for I have to raise credit note for this because this is a sales return. So since sales I have reported, I have to show sales return also. Otherwise, my sales in GSTR1 and sales in my books won't match. So we have to show sales return. So I have to show my credit note here in GSTR1 return. So there's one tab of debit note and credit note in GST return where I will show that 2 lakh rupees is my return. So out of 10 lakh, if 2 lakh is a return, so I'll show that 2 lakh rupees is my sales return. On that, I'll compute the 18% or 5% or 12%, whatever tax liability. So that will be considered as my sales return. So sales return also we have to show. If there is a difference in the rate and we are raising the debit note that on sales, then that too we have to report under the tab debit note and credit note. What is the filing frequency of GSTR1? So the GSTR1 can be filed monthly or quarterly. Now, who can file monthly and who can file quarterly? So monthly can, if your turnover in the previous financial year is 5 CR, then you have an option to file the return quarterly. If my turnover is up to 5 CR in the previous financial year, I have an option to file the return quarterly. Else, if my turnover is more than 5 CR, compulsorily I have to do monthly. Okay, so I have an option. Even if my turnover is below 5 CR and I want to go for monthly, I can go because it is an optional. The next one is QRMP scheme. What is QRMP scheme? See, suppose my turnover is below 5 CR and I don't want to file a monthly return because there are a lot of compliance. You have to maintain your sales register, purchase. So entire working you have to do monthly. So instead of that, since my turnover is below 5 CR, I go for a quarterly return. So what government says, you can file your return quarterly, but payment has to be done monthly. See, government needs money. आपको पैसा तो government को देना ही है. Whether आप monthly file करो, quarterly file करो, payment आपको government को monthly ही करना है. तो government क्या बोल रहा है कि अगर आप quarterly return में भी जाते हो, then you go for quarterly return. आप file quarterly करो, कोई issue नहीं है. But आपको payment तो monthly ही करना है. तो even if you go for quarterly return, आपको सिर्फ return filing quarterly करना है. But आपको payment तो monthly ही करना होगा. Okay, what is the due date? अगर मैं monthly option में जाती हूँ, if I'm going for a monthly GSTR1 option, then suppose I am into monthly GSTR1 option, then I have to file by 11th of every month. So for the month of January, I have to file by 11th of February. For the month of December, I have to file by 11th of January, 11th of next month. Suppose I'm going by quarterly, then 13th of the following quarter. For example, for April to June, the due date is 13th of July. For July to September, the due date is 13th of October. So the 13th of the next next month of the every quarter is the due date. But payment is to be done by okay, payment will come in 3 days. Sorry. So 11th and 13th is the due date for GSTR1. Even if you opt for quarterly, you have to make the payment monthly under QRMP scheme. That is quarterly return monthly payment scheme. The next one is GSTR3B. What is GSTR3B? So 3B is a self-declaration to be filed for summarized detail of all your outward supply, input tax credit claim, tax liability ascertained, and taxes paid. So GSTR1 has only sales data. Whatever sales I have made in the previous month or previous quarter, I will add in that my GSTR1 return. So in how they will come to know what is my tax liability, how much input tax credit I have availed. So for that one return is there, which is GSTR3B. So the GSTR1 data will get auto-populated in your GSTR3B. So whatever sales, whatever output tax liability of my is there, it will come automatically from my GSTR1, which I have to check that it is coming correct. Now I have to see my input tax credit. So in our example, I've said that I've paid 18,000. I have my output tax liability is 20,000. So 20,000 will come automatically from my GSTR1. 18,000 will come from 2A to B, which we will discuss later. So that is my input tax credit. And my next tax liability is 2,000 rupees. So this all details I have to give in my GSTR3B return. And 2,000 rupees tax I have to pay, which I will make the payment. Only after making the payment, you can file the GSTR3B. So someone says, right now I'm in the fund कम है मेरे पास, मैं एक दिन बाद करूं या 2 दिन बाद करूं, पहले रिटर्न फाइल कर देते, पेमेंट बाद में कर लेंगे, अभी थोड़ा मेरे को शॉर्ट ऑफ फंड्स हो रहा है. सो कैन आई फाइल माय 3B right now and I'll make the payment later. No, you have to make the payment first and then only you'll be able to file the 3B. So same as GSTR1, the periodicity is either monthly or quarterly. Same. If your turnover is up to 5 crore, then you have an option to file the return quarterly. Or if your turnover is above 5 lakh, the compulsorily monthly return. What is the due date? For monthly, 20th of every month, and for quarterly, 22nd of the month following the quarter. Okay, and for some state, it is a 24. So if my due date is, if I'm going for a monthly, then for the month of April 2021, I have to file my GSTR 3B by 20th of May. And I have to make the payment before that day, and then only I can file the return. For quarterly, the return due date is 22nd of the quarter. Matlab for April to June 21, my due date is 22nd of July. Okay, even my due date for filing 3B is 22nd July. I have to make the payment of tax by 20th of March because I'm into QRMP scheme, quarterly return monthly payment. So for payment, I have to make the payment by 20th of next month. So for April, I have to make the payment by 20th of May, May 20th of June, for June 20th of July. So even if you file, you can file your return by 22nd, but the payment has to be done monthly. So this is a 3B, which is a summary return of my purchase and sales. The next one is GSTR 9. What is GSTR 9? It is an annual return to be filed by the taxpayer registered under GST. It is due by 31st December of the year following the relevant financial year. What is GSTR 9? So GSTR 9 is an annual return. So I'll give my annual summary because in GSTR 1 and GSTR 3B, either I'm giving monthly summary or I'm giving quarterly summary. And there are some corrections of the previous financial year, which I've done in my current return. So that all will come in my GSTR 9 annual summary. So annual summary will represent that how much was the total sales of my last financial year. What was the input tax credit I have shown? Suppose in my 2021 GSTR 1 bill which was missed for 1920, I have shown in my GSTR 1 of 2021 of April 20. Okay, so that will come in my GST, but that is not pertaining to my 2021 sale. So that RICO I can give in this GSTR 9 that this pertaining to these are the sales bill which pertaining to 1920, but I have shown in 2021. So this is the annual return where we can give the annual consolidation of my all monthly or quarterly return filed during that financial years. Who has to file the GST? Every registered dealer has to file? Yes. All the registered taxpayer has to file the GSTR return, but the government has given the option to the small taxpayer. Who is small taxpayer? So if my turnover is up to 2 CR, I have an option to file the GSTR 9. Even if I don't want to file, that is fine if your turnover is up to 2 CR. But I would suggest if you have more corrections in your GSTR 1 or GSTR 3B, you file GSTR 9 and give all the summary, consolidated summary of your annual. But for full financial year, you can give your summary. But it is optional up to 2 CR. If your turnover is more than 2 CR, then it is compulsory. You have to file your GSTR 9. Next one is 9C. This is audit under the GST. So who has to file 9C? Every registered person whose aggregate turnover during financial year exceeds 5 crore rupees shall get his account audited under the subsection 5 of section 35. Suppose my turnover is more than 5 CR, then I have to compulsorily do audit. I have to get my books of accounts audited, and I have to file one GSTR 9C, which is the audit form under GST. They shall furnish a copy of, along with the GSTR 9C, I have to give my copy of audited annual accounts, means my profit and loss account, my balance sheet, my cash flow statement, everything I have to give with GSTR 9C, and we have to match. The sales as per GST return is this much, sales as per P&L is this much. So it's a reconciliation statement. 9 and 9C is an annual summary. 9 is a reconciliation statement and 9C is an audit. So they shall furnish a copy of audited annual accounts and reconciliation statement duly certified in form GSTR 9C. If my turnover is below 5 CR, I don't have to file GSTR 9C. It is applicable only if my turnover is more than 5 CR. Now next is GSTR 10. Suppose I have cancelled my registration. We have already discussed cancellation of registration. Either I have done voluntarily or if the department has done. If I have done the voluntarily, I'll get the order of rejection. Your registration stands cancelled with effect from this and this date. So and so date. So the one date will come. So after I get that cancellation order, within 3 months from the date of that order, I have to file one GSTR 10. it is also called as final return. So I have to give the summary that this is my final return till date, and now there is no liability which I am liable to pay. If something is missed in your earlier return, then you can pay that tax and you have to file the GST at final return if something is payable. Otherwise, you have to file that final return and you can say that there is no tax liability which I have to pay. The next one is GST at 2A and 2B. Now, what is 2A and 2B? So whatever purchase I am doing, how the I'll come to know that the person has paid the tax or not. Suppose I have purchased goods from Mr. X. Mr. X is not paying the tax, he is not filing his return. Then can I claim the credit of that Mr. X? So what government says, until and unless it won't reflect in your GST at 2A, 2B, you won't be eligible to claim the credit. So Mr. X, I have bought goods for 1 lakh, I've paid him 1,18,000, but that person is not paying tax to the government. So until and unless that Mr. X don't pay the tax of 18,000 to the government, I won't be able to claim that credit. It is compulsory for Mr. X to make the payment for me to eligible for input tax credit. So 2A and 2B is a system generated statement where I'll be able to know how much credit I can claim. So all my inward supply, all my input tax credit will come in 2A and 2B. So whatever amount I can see in my 2B, that much only I can claim. I cannot claim any amount in excess of the amount available in my 2B return. So what is the difference between 2A and 2B? So 2A will reflect my all the purchase bill of that particular month. Suppose I'm checking the 2A of April 21. So all the bills, all the purchases of April month which I have done and which supplier has paid with the person from whom I have purchased, that person has paid. So that will come in GST at 2A. 2B is the monthly period. Suppose I have purchased goods from Mr. X in the month of April, but that person pays in the month of June. Okay. So in April, I won't be able to claim that credit because that person has not paid the GST. But that person has paid in the month of June. So it will come in June 2B so that I can claim in the month of June 2B. So 2B reflects as and when the person files, it will come in that month in my 2B return. So I can claim according to my 2B only. And suppose that bill is of April, but that person has filed in the month of June. But in 2A, it will come in April. So 2A will come monthly summary. In 2B, when I can claim that credit in that month, 2B will come. Is one more concept, composition scheme. Suppose I am a small taxpayer. I don't want to go with GST 1 monthly. I don't want to come into so many complications, compliances part. Okay, I don't want to, I'm not that much big. I can afford professional fees. I have to pay. I have to keep all the documents. I have to prepare and maintain monthly books of account. So if I don't want to go into so much of compliance, I can opt for a composition scheme. Now, what is composition scheme? So for small taxpayer, composition scheme is launched. Composition scheme is a simple and easy scheme under GST for taxpayer. Small taxpayer can get rid of tedious GST formalities and pay GST at a fixed rate of turnover. This scheme can be opted by any taxpayer whose turnover is less than 1.5 CR. So what government says, if your turnover is up to 1.5 CR, then you are a small taxpayer. And if you are a small taxpayer, then you don't have to file every month GSTR 1, every month GSTR 3B. So you can go for a composition scheme. What if I go for a composition scheme? If you go for a composition scheme, you have to pay a fixed rate of GST, not 18%, 12%. You have to pay a fixed rate of GST, but you cannot charge that GST to the customer. Okay. In our example, I've sold goods of 1,20,000. So I've charged 20,000 of GST to my customer, which I will collect from him and pay it to the government. But under composition scheme, I cannot charge GST on my invoice. You have to pay the tax directly on your sales. Suppose I'm a small Karyana shop. Karyana shop अभी एवरीडे मेरे पास दिन में 100 कस्टमर 150 कस्टमर आए तो मैं एक जन का जीएसटी वाला बिल तो नहीं बनाने बैठूंगी. तो उसके लिए कंपोजिशन स्कीम अच्छा होता है कि आपने पूरे मंथ में जितना भी सेल्स किया उसका 1% आप गवर्नमेंट को दे दो. यू डोंट चार्ज इट टू योर कस्टमर. तो मेरे को वो टैक्स इनवॉइस भी एक बनाने की जरूरत नहीं, बिकॉज इट इज वेरी डिफिकल्ट फॉर स्मॉल करियाना शॉप टू प्रिपेयर ईच एंड एवरी. अगर दिन में 100 कस्टमर आते हैं तो एवरी कस्टमर का वो बिल बनाना प्रैक्टिकली पॉसिबल नहीं है. सो इन दैट केस they can opt for a composition scheme. What is the GST rate? So for if you are a manufacturer or trader, the rate is 0.5% CGST, 0.5% SGST. The total tax rate is 1%. So suppose मेरा मंथ में पूरे मंथ में मेरा सेल्स हुआ 10 लाख रुपए. So I'll pay to the government 1% of that 10 lakh. I won't be charging that 1% to my customer, and I won't be able to claim the input tax credit. There is one more condition in composition scheme is you are not eligible since you are paying only 1%. So you cannot claim the credit of the input tax credit. Matlab whatever tax you have paid on your purchase, you are not eligible to claim the credit of that. Who can go for a composition scheme? The person who has turnover up to 1.5 crore, who don't do interstate sales. If you're doing the interstate sales, I'm doing sales from one state to another state sales, then you cannot go for a composition scheme. If your turnover is more than 1.5 crore, you cannot go for a composition scheme. If you are a casual taxable person, then you cannot go for a composition scheme. What is casual taxable person? Will come into the next slide. If you are a non-resident taxpayer, then you cannot go for a composition scheme. The rate for manufacturer and trader 0.5, 0.5, 1%. Restaurant not serving alcohol, they can also go for a composition scheme. They have to pay 2.5%, 2.5%. The total rate is 5% they have to charge. They will not be able to claim the input tax credit. And other service providers. Suppose I am a service provider. I am not a trader or I am not a restaurant. I am a service provider. Then can I go for a composition scheme? Yes. For you, the rate will be 6%. That is 50-50. 3% will be CGST. 3% will be SGST, so 6% will be the rate for service provider if they are going for a composition scheme. One important condition, you cannot claim the input tax credit. While invoice will come later on, okay, other 6%. However, in case of a northeastern state and Himachal Pradesh, the limit is instead of 1.5 crore, the limit is 75 lakh for northeastern state and Himachal Pradesh if they want to opt for a composition scheme. Now, non-resident taxable person. What is non-resident taxable person? Person residing outside India and making taxable supply in India. Okay, the person is outside India and he wants to make a taxable supply in India. Then he has to take a registration as non-resident taxable person. There is no threshold for them. Up to 20 lakh or up to 40 lakh, they don't have to take. So there is no threshold for non-resident taxable. Even if they sell for 1 lakh rupees or even they sell for 50,000 rupees, they have to take the registration as a non-resident taxable person. While taking the registration, see, it is for a small period. The period for which he is going to do the supply in India, making the taxable supply in India for that period. So it will be, registration will be for a shorter period. So person knows, suppose I'm saying that for 30 days I'll be in India. After that, so I can, in my registration, I can say that I want registration only for 30 days. So the registration will be for 30 days. There's a limit of 90 days. Maximum you can go for 90 days. So either you say or 90 days, whichever is less, that for that period you will get the registration. Suppose I'm saying I want only for 30 days as a non-resident taxable person, then my registration validity will be for 30 days only, or maximum I can go for 90 days. That can be extended if necessary with the permission of the GST officer. There's one more thing, casual taxable person. What is casual? It is similar to non-resident taxable work. One casual taxable person. So casual taxable person means, since the GST is a destination based tax, suppose I'm in Maharashtra, I want to have an exhibition in Gujarat. Okay, so I'm going to go in Gujarat. I'll sell that product in Gujarat. So my place of supply is Gujarat. I'm providing service from Gujarat. So I have to take the registration in Gujarat state. I'm registered under Maharashtra, but I cannot use the Maharashtra registration when I'm having exhibition in Gujarat. So I have to take the registration of Gujarat state for that temporary period for which I have a that event of my event. So that is known as a casual taxable person registration. Same as non-resident, casual taxable person will have a limited registration validity. So you have to say, okay, for example, I know my exhibition is for 7 days or my exhibition is for 10 days. Then you can have that registration only for that period, and after that it will get cancelled. So it is for a limited period. One more condition in non-resident taxable person and casual taxable person is, so they have to make advance payment. They have to calculate their approximate liability. How much will be the liability for that period, and they have to pay that tax on approx basis in while doing registration only. So when I'm doing registration, I will calculate my approximate liability. So suppose I assume that my sales is going to be 10 lakh rupees, then I have to pay whatever tax rate is there on my product. I have to pay tax along with the registration. Suppose my tax paid is excess. After my events get over, I came to know that I have paid excess. Then you can claim a refund. So that is not an issue. But you have to pay the tax on your approximated liability at the time of registration only. Now, the one or two last point. What is tax invoice? See, whoever is registered under GST has to display their name along with their GST number, along with their address on the door or at the entrance of their premises. It is compulsory, because if the GST officer visits and if he sees that your board or your GST number is not mentioned, they can levy the penalty or even they can cancel your GST registration. You have to prepare tax invoice every time you raise the bill. So what you have to mention in your tax invoice? So in tax invoice, you have to write that tax invoice. You have to charge the GST separately. What will be the rate? Suppose my product is 18% and I'm doing within the state sales, and I'll enter taxable value. I'll enter CGST 9%, SGST 9%, and my total invoice value. I have to add my GST number. I have to add the GST number to the person to whom I'm selling the goods. That person GST should be there in your GST number. And even if we are purchasing goods, we have to make sure that my GST number is there in that bill. Otherwise, that person won't come to know that I have a GST. Then I won't be able to claim the import tax credit. So for that, it is necessary to have the GST of both the party, purchase and seller. Then we have to mention the HSN and SSE code. So as discussed, if you are into the goods, you have to write the description of your product along with the HSN code. If you are into the service industry, you have to write the SSE code in your invoice. It is mandatory. Suppose I am a composition dealer. So can I issue tax invoice? No. As I said earlier, composition taxable person can't charge GST in their invoice. They cannot collect the tax separately. So in that case, they cannot issue the tax invoice. They have to give the bill of supply. They just have to give the bill of supply. So their invoice will heading as bill of supply and not the tax invoice. Also, they have to mention at the end of the invoice that I am registered as a composition dealer, not liable to collect the tax separately. If he collects the tax separately, then the department will recover that tax. So he can't collect the tax separately, and even invoice should not have any GST. And he has to mention that he is a composition dealer, not liable to tax collect separately. One is amendment of registration. Suppose I have taken the registration and now I want to change. I have shifted my place from Borivali to Ghatkopar. Now I want to change my place of business address. Then how can I do so? So whatever changes is there in your registration, the same has to be intimated to the GST officer within 30 days from the date of change. So we have to file an online application along with the necessary proof. We have to give in that we have shifted my office from this place to this place. Officer will check if it is the documents provided are proper, correct. They will approve the application and then your address will change. So this is amendment of registration. Whatever, suppose it's a partnership form. So one partner has changed. So whatever amendment you want in your GST registration, you have to do it within 30 days from the date of registration. Now, interest and late fees. Suppose I have taken the GST registration, but I'm not filing the GST return. Okay, so if you don't file the return for 1 quarter, if you're into the quarterly periodicity, and if you don't file your return for 1 quarter or 3 months, if you're in the monthly, the government will cancel your registration. They'll give the opportunity that you file your return. But even if you don't respond to that notice and still you don't file, then they'll cancel your GST registration. So if I want to file that return, which I have not filed, I'm filing it late. So what will be the late fees? So late fees for 3B is 50 rupees per day. So for example, for the month of April 2021, my due date is 20 of May. Okay, I'm filing the return on 25th. So I'm doing the delay of 5 days. So in that case, I have to pay 250 rupees. 50 rupees for 5 days. That is 250 rupees to the government. So 50 has a breakup, 25 CGST, 25 SGST. So 50 rupees per day. I have to pay the late fees for filing 3B. And if I'm filing GSTR 1 late, then I have to pay a late fees of 200 rupees per day for GSTR 1. Interest is 18%. If I'm making the payment late, suppose my liability is 20 lakh rupees. Okay, I'm paying the late. So on 20 lakh, I have to pay the interest of 18%. Now, interest is to be paid on net liability or gross liability. So initially, when the GST was implemented, the department was of the view that suppose my liability, suppose my output tax liability is 2 lakh rupees, my input tax liability is 1 lakh 50, my net tax liability is 50,000 rupees. So initial when GST was implemented, the assessee was getting notice that since you have not paid the tax, you are liable to pay interest on 2 lakh rupees. That is your gross output liability. So later on, various recommendations made to the GST Council, and so final conclusion is made that obviously my 2 lakh, because I how much I have to pay from my pocket, only 50,000 and not 2 lakh rupees, because I have a credit of 1 lakh 50,000 which I can utilize against payment of that 2 lakh rupees. So my net liability is 50,000 rupees. So later on, it was decided that now the interest is to be paid on your net liability and not gross liability. So in this case, I'm liable to pay 18% interest on my net liability, which is 15,000 till the date of payment. From the date of liability till the date of payment, I have to pay 18% interest. Any question and answer?
Hello.
Yeah. We can
Ma'am,
go
is
for
audible?
question answer if any question. Yeah, you are
Yes.
audible.
Some question from student side, ma'am.
Yeah.
One question number first. What is the difference between TDS and TCS?
TDS is tax deducted at source and TCS is tax collected at source. Okay. Suppose I'm making
Okay.
TCS is applicable on few products. Suppose I'm purchasing a car. So that car company will deduct TCS from my amount and he'll deposit. So it will come in my return. So the government will come to know that this is a TCS. So to track that transaction, TCS has come.
Okay. The another question from student side. What is GSTR3?
See, when the GST was implemented in 2017, there was a concept of GSTR1, GSTR2 and GSTR3, which was the which मतलब it is ये रिटर्न आने चाहिए थे. Actually उनका जो प्लान था स्टार्टिंग में जब GST इम्प्लीमेंट हुआ ना, तो GSTR1, 2 and 3 यही 3 रिटर्न का प्लान था. तो सेम 1 जैसे बोला वो सेल्स रिटर्न होगा, 2 में मेरा पूरा इनपुट टैक्स क्रेडिट आएगा और 3 विल बी द फाइनल रिटर्न ऑफ सेल्स एंड परचेज. बट सिंस उनका पोर्टल पे वो 3 इम्प्लीमेंट नहीं हुआ, वो लोग ने एक टेम्पररी रिटर्न निकाला 3B, which is a summary return of my output and input tax. But till date, they have not implemented GSTR3, which was they are about to implement from starting. But till now, they have not yet implemented 3, and 3B is a replica of 3.
Okay. The next question, is the GSTR1 filing is mandatory?
Yes, if you are a registered dealer, you have to file your GSTR1, because until and unless you don't file your GSTR1, the person to whom you have sold the goods won't be able to claim the credit. So it is mandatory to file the GSTR1, and if you file GSTR1 late, there is a penalty of 200 rupees per day.
Okay, thank you. Thanks a lot, ma'am. Such a great and in-depth sessions regarding to the goods and service tax.
Thank you so much, sir.
Yeah. In such a session, ma'am, clear the concept of what is actually goods service tax, what are the different terminology which apply in a GST, components of GST, what are the different GST slabs, GST refund, GST returns, GSTR1, and so many concepts in depth. A really helpful session for the TY BAP student, as well as all those are appearing for the indirect taxes. I really thanks to respected Chartered Accountant Kinjal, Mirani ma'am, and really thanks to President and Founder Principal of S.S.T College of Arts and Commerce, Ulhasnagar. And so really thanks to IQSC Coordinator, respected Dr. Khushbu Purushwani ma'am, and whole coordinator as well as the management team organized such a great session. Thank you. Thanks a lot.
Thank you, S.S.T College, for giving me an opportunity to speak on GST. Thank you so much.
Thank you.